Now let's go to India, where the banking sector has lost nearly $11 billion of its market value after the $1.8 billion fraud at Punjab National Bank came to light last week. Share prices continue to drop after more lenders reported exposure to the scam. The country's tax authorities estimate that the banks could take a hit exceeding $3 billion from loans and guarantees linked to the scandal. Now, to shed more light on this scandal and its implications, we go to Birmingham, and joining us live from there is international finance professor Sunil Poshakwale of Cranfield School of Management. Thanks so much for joining us, Professor. Now, this is the fourth day of trading since this scandal began, as we mentioned, and $11 billion have been wiped out of the market capitalization of Indian-listed banks. I mean, put this in context for us. How does this compare to other such scandals in the world, and how will this reverberate across the sector?
Well, this is clearly a big dent to the confidence of the banking industry, particularly in India. But having said that, this is not something new. The Punjab National Bank has had particularly two previous scandals through the diamond jewelers they were exposed to, and they lost nearly 600 million or more on that. So it is not good for the reputation of the Indian banking industry. The size of this scandal is clearly not known yet, and as you say, it could roll out to over 3 billion. But I think the Indian banking industry has large assets, and it should be able to withstand this crisis.
Okay, that's interesting. You mentioned it's not new that they also lost 600 million in the past. Now, this fraud went on for 8 years under the nose of the Central Bank of India. What heads will roll, and which institutions will be hit?
Well, I primarily think that there is really a serious need, an urgent need to look at the role of auditors. Part of the problem is that we have had such scandals in the past, and auditors who are supposed to be looking into these matters have been found wanting. One case, very famous case, was Satyam Computers. That was going back many years. But there also the auditors were at fault for not being able to detect the fraud committed by the owners of Satyam Computers Limited. In this case, clearly, what has to be established is whether it's the auditor, is the problem lying with the system, or is the problem lying with individuals? Now, clearly, it's been detected. There are two individuals particularly who have been doing this under the avoiding the scanner, really, the system, so to say. And so, therefore, there is a need to also look at how to strengthen the internal control systems in the banking sector so that such frauds do not occur again. Now, in terms of which heads to roll, I mean, clearly, Reserve Bank of India has a very important role here to play. In a sense, they will have to investigate this issue on an urgent basis, probably. Very soon they will be appointing a special audit committee to look into the matter and report back as to the causes of how and why this happened, so that such things can be prevented in future.
Okay, hopefully they will be prevented. But tell me, Professor, how were Indian banks performing before this scandal, and how can they absorb this hit? Very briefly for us.
Well, as I said, the Indian industry has quite a large amount of assets. Their assets, as far as I know, exceed $1.5 trillion. So they do have assets. And there is, of course, the bank. There is also the government, which would make sure that the banking industry overcomes this crisis. So I'm fully confident that this will be resolved soon.
Okay. Thank you so much, Professor. That was Professor Sunil Poshakwale from Cranfield School of Management.